Marius, would you agree with the term it's at an all-time low, the motoring industry, or have you actually seen some recovery?
I think it's been, as we know, an extremely challenging year, or 18 months for us. As you know, the real downturn started last year, August, September. So the motor industry will really, up until, the latest figures, I think October has got a slight, on last year, only 12% down, which is, we won't say a real recovery, but we believe it's stabilizing. So within that, your question earlier was, how has that influenced advertising? Yes, it has. If you look at the motor industry versus other industries, advertising spend in the last 9 months has been down 34%. If you compare that with the cellular industry, only down 18%. So yes, we've probably been hit the hardest, yeah, it's been challenging, and we have to think differently about it.
But yet you are still spending, and I know a few weeks ago we had a whole discussion on the buddy ad. So Jerry, what are the repercussions if you stop spending, particularly in a recession, particularly in a retail environment and above the line advertising?
Yeah, one of the big lessons in advertising, in communications as a whole, is that during difficult times, it's really when you should be getting out there, saying something, reconnecting with the consumer and so forth. What we do know is that during good times, consumers obviously have disposable cash and they spend and spend and spend. During hard times, they start thinking more and more before they spend. And it really is about two things. The one is big brands that are solid, good relationships with their consumers, are the ones that then become first choice, as it were. The other thing that happens is because consumers think harder about what is it they spend, at least how much they spend, and where they spend their monies, trust in the product, in the brands they wish to spend their monies on becomes a huge factor during downturns. And the big lesson is, again, it's not anything new. The big lesson is that big brands such as Toyota actually do well.
Because they're still brand loyal, aren't they? And Mark, your view as well. They're still brand loyal. They might not be able to afford the top level, but maybe to downgrade, but still within the umbrella of the Toyota.
We've talked obviously a lot, Jackie, about this whole issue of whether in the recessive environment that people are downsizing their vehicles. There's issues, are they extending their credit because of the NCA to still be able to afford the vehicle or what have you. So yeah, really, are we seeing this huge amount of, I mean, from Toyota's point of view, are you seeing the people shifting to smaller, cheaper cars? I mean, is that, we've seen with the big SUV segment, for example, 9% of the market in October last year, still 9% now. People are still spending. Yeah,
they are. Actually, it's a right observation. The B segment, as we call it, and actually even the sub-B segment, where the, let's say, entry-level vehicle, has become very competitive. So Mark, you're right there. People are looking for, affordable, good value vehicles. Within that, hopefully engines that produce, a reasonable or high output. So looking even at the future and how we see the market in South Africa, is that the B segment and sub-B segment is going to become extremely competitive. But again, in the premium segment, as you said earlier, the SUVs, it seems that it hasn't affected people to that extent. So the people in South Africa, they love their SUVs, they love their off-roading. So there is still people out there with money who's prepared to pay, that increased price. As you also know, not to get to your next question, but pricing has become extremely, hugely under pressure. Firstly, in the beginning of the year, we saw exchange rate pressures, specifically the SUVs that you actually import from, from various countries, in our case, mostly from Japan. And that has really impacted on, I think, the entire industry with regards to pricing. But the last few months, from an import point of view, the rand's recovery has been, beneficial. So hopefully in future months we'll see some of that being passed on to the customers. But yeah, sub B and B segment is going to be, really the growth area of the entire industry.
Now, certainly we've seen a lot of issues with regards to, I mean, you mentioned the pricing thing, and that entry level price has rocketed in the last few years without a doubt. But for you as Toyota, and certainly for the agencies that you use as well, how has that affected where you actually decide to spend your resources?
I think just to talk from Toyota's side, it was we made a strategic decision to really spend behind, you know, our locally assembled vehicles, you know, Fortuner, Corolla, Hilux. You know, that's really where the margins sit, and that's you know, we made a conscious decision to support those versus some of the imported vehicles. So yeah, within that, you know, it's all about margin protection. It's all about, you know, fish where the fish are, and that's a decision we actually made. It actually paid off, you know, paid for us. In the past few months, yeah. Because
we're looking at Hilux. I mean, you know, it's particularly in South Africa, quite popular, Bakkie. So it's the top seller in South Africa in terms of cars, isn't that?
Top seller overall, yeah.
It's quite hard to imagine that the Hilux Bakkie is the top seller, and our discussion earlier on in the B and sub B segment. So it is. We call it the second farmer on the farm, but it's really. You know, been really for us a great success story. But again, not to be, you know, both feet on the ground. You know, we just need to keep grinding away. But yet, advertising spend, it's in the top 3 for last year. Yeah, it has been. As I said earlier, yeah, if you look at, we had a big campaign end of last year. Yeah. Yes. We just launched a few months ago, or a few weeks ago, a new campaign on Hilux. So again, you know, it's important for us to, and I think others speak for other manufacturers, to really, your introduction was around, you know, keeping jobs or trying to retrench as less people as possible. So it's important for us to keep the Durban plant and the factory sound and have as little impact on people's jobs and roles, and the Hilux is locally produced, so it was a strategic decision.
I mean, the marketing lesson is out of sight, out of mind, and we were talking earlier about why not push your slow-moving vehicles? Do you push a famous brand? That's it. Do you push a famous product? And the lesson here is absolutely you do. And we know it pays dividends. We know that you get the result. You were asking earlier about, you know, where is this money being spent across the media spectrum? Obviously, digital platforms have become key now because more and more consumers interact and play on digital platforms. So whether it be traditional websites all the way to social media. That's been a big growth. We've seen a big growth there, and obviously effective media, because, you know, if you start talking about accountable marketing, you can measure what you do there and measure your return. What we've also seen is that obviously media owners are also under pressure. So it hasn't necessarily been, one would have expected that maybe there's less activity on television. Television is substantially discounted. So there's also a lot of activity that's gone into mainstream television, and in the South African market, radio stays big. The one area where we can say that there's been serious cutbacks from a marketing point of view is if you're marketing on the ground. So activation activities obviously cost a bundle. We've seen drastic cuts there, but across media. Yes, of course, there's been cuts, but the activity has been across the board.
In terms of the, sorry, Jackie, in terms of the activity, I mean, in terms of what you're saying is obviously you still have to keep promoting the brands that are doing well. We referred to it as the Coca-Cola syndrome, where, you know, it's the most successful brand, but we see them everywhere. It's very much the issue of split between corporate branding and brand awareness as opposed to selling vehicles. You know, how much reliance is placed by, say, Toyota on your agency and your media planners versus what you think is actually the right thing to be doing?
I think the big challenge now is to how can you actually merge those two? How can you find that nice balance between a retail specific commercial, but still there's some brand elements coming through? I think industry wide you'll see less of corporate as you define it. It's more about moving product, and we've seen this year that big manufacturer actually launched a product, an exciting new product, with a retail offering immediately, you know, as part of a big above the line campaign. So we've seen a lot of retail messaging actually on television now, which we haven't seen in the past. So I do think, yes, the return on the investment is becoming more so. I think that the time for a pure corporate commercial from a big manufacturer is probably, you know, far off again. I think these days, you know, the ad need to work for you, but it's to find that balance, because you can easily get into a very cheap looking commercial. You know, this is the offer, it plays, and what does that do to your brand? So it's finding that I would imagine happy medium that we all kind of struggling with. So it's